Let's move on and talk about InfoEdge. Now, InfoEdge has also clocked in a pretty good quarter. There is a recovery in the Naukri business. Billings in Naukri have now hit 14% as IT hiring is showing signs of a pickup. Chintan Thakkar, whole-time director and CFO at InfoEdge, is now with us on the show. Mr. Thakkar, thank you for joining in. Let's talk about Naukri business, because your billings growth in the Naukri business was subdued over the last few quarters, and this quarter it's seen a double-digit growth. Can you sustain this kind? And what is happening on the IT hiring front? Has it bottomed out? Are we seeing a pickup?
Yeah, no. So you are very right. Because if you look at last 4 or 5 quarters, we have been kind of gradually growing up. And in my past commentary, we have been saying that look, I think it looks like that we are out of the U-shaped recovery and we are going on the upside of it. Right? And this quarter kind of proves us right in that sense, that now we are continuing on the path of growth. And more interestingly, it's just not about the headline number that you talked about, but when we slice and dice the numbers and when we look at it, every segment and every sector, whether it's metro cities or tier 2 cities, whether it's IT or it's non-IT, whether it's consultant, large clients, small clients, we look at all the slice and dice, and I think our confidence is kind of much more than what it was when you look at the last year numbers. So we are really hopeful that this trend will continue. And the second part of your question on the IT hiring, yes, we are looking at the IT hiring also kind of gradually coming up, but still the non-IT is a kind of bit more than what IT is, which in a way is good also for us, that it kind of we are no matter whether it's tech or non-tech, our platform seems to be working very well. But yes, IT hiring is certainly kind of also slightly on the up.
I think non-IT hiring segment grew 20%, while the IT segment grew 12%. Is that correct, Mr. Thakkar?
Yeah, that's
in
correct.
The quarter gone by? Okay. So for the full year, can we get double-digit billings? Last year, it was flattish. So for this year, do you think it's possible?
Yeah, no. If you really look at the past trends and the commentary that I've just given about that it looks like that the things are kind of improving quarter after quarter, then we can really kind of expect that. Look, even if you look at last, let's say 10 years CAGR, we would be in the recruitment business would be something around at least 15% kind of CAGR. So I think that's the zone in which we have played in the past, and we are hoping that at least we would go. In fact, we would target even more than that, but let's see how it goes. Particularly the last quarter of the year is very, very critical for us. But I must also add here to say that, look, certainly the job market has given a trigger for the growth. But it is just, I think the growth rate is much higher than what the trigger is, and that's because of the superior execution from our sales team, marketing team, product team. I think so. There is a delta growth that we are getting also because of superior execution that we have. So keeping both the factors in mind, the execution as well as the recovery in the IT market and non-IT kind of continue to go stronger, we would it would not be unreasonable to expect that.
Unreasonable to get back to the double-digit billings growth that we've historically seen. Historically, it's been 15%, but at least double-digit for this year is not unreasonable to expect now with the recovery in IT and continued strength in non-IT. What percentage of your Naukri revenues comes in from non-IT?
So if you look at direct, from IT is something around, let's look at the consultant, and we divide, because consultant, we don't know who the real customers are, the growth, the IT as well as the non-IT, right? But if you really take it with certain assumption around that, we would think that non-IT should be around, maybe 45%, maybe 50% type of, share in the overall hiring.
Okay. And you want to further increase the contribution of non-IT. So from current 45-50%, you would like to scale it up to what number, sir?
Look, we are at a certain scale that whatever is happening outside in the economy, that gets mirrored on platform. So I think it also depends on what the external reality is, which would get reflected on our platform. Right? But as a strategy, we are expanding our branches in the tier 2, tier 3 town as well. And that's also getting kind of an additional delta of growth for us. So we really don't have any percentage in mind. If IT again suddenly starts booming well, maybe IT will again start the.
So when will you
has been
expand
has been growing, and it's a reflection of what's happening in the economy.
Yeah, you spoke about the strategic decision taken by the company to expand into tier 2, tier 3 cities also. I think the goal is to hit 100 cities from the current 70, your presence. When will we hit 100 cities? Is it 1 year, 2 years away, or even longer?
Look, last 15 to 18 months, we have already increased our, our strength in the tier 2 towns and tier 3 towns. Right now, we will kind of wait for the results to come, and certainly we are seeing some early results in some of those places where we have opened the new branches. But we would wait for it, and then maybe in Q4 and maybe Q1 next year, we would probably look for another round of expansion.
Okay. Mr. Thakkar, hi, good listening in to you. Let's also now put the spotlight on the other businesses. Let's talk about 99 Acres. Let's talk about Jeevan Sathi as well. On 99 Acres, you've done, I believe, revenue of about 102, and the margins is at 17%. The profit before tax, I mean, that's still minus 14%. So, what is the game plan for 99 Acres in terms of better profitability, and also throw in a word on the Jeevan Sathi business as well? What about reducing the cash burn and the losses there?
Yeah. So if you look at the billing number and look at the expenses, because revenue is a lag, effect on that, But if you look at that, we are reducing the losses in terms of absolute amount. They are not, really very high. And we are hopeful that by Q4 we will have a run rate of, of break-even. So it should be EBITDA neutral by Q4. That's our expectation. But let's see how it goes, and it also depends on how competition is playing as well. Jeevan Sathi has been, the past 2 quarters has been growing 30% plus. So that's a very encouraging story. Whatever the new strategy that we adopted, seems to be working out for us, and that's already almost EBITDA neutral. So that also we think that for the year, unless we change the strategy and start spending more.
No, Mr. Thakkar.
Yeah,
sorry. Just to clarify, you said break even for 99 Acres in this year. That's at the EBITDA level or the net profit level?
No, at the EBITDA level, there isn't much difference for us, EBITDA and PBT, because there's no real borrowing for us.
So EBITDA break even for 99 Acres in this year by
Q4? The run rate basis in Q4 is something which we would hope for, right?
Yes.
Because in absolute amount, the losses are not very high.
Sure, and for Jeevan Sathi? Yeah.
It's almost already, even if you look at Q1, Q2, I think, this quarter, cash basis, I think it's about 1 crore or 2 crore kind of losses. So I think it's negligible. So we are hopeful that even that. So Jeevan Sathi could be even for a full year, unless, as I said, that we start spending more on the marketing side. We can expect that. So on the current strategy, it should be the case. While 99 Acre, we hope that by Q4, there are some certain initiatives that we have taken. We hope that it kind of start producing more results by the Q4 end. So let's see how the Q4 goes for 99 Acre. But that's the target.
Okay, we'll leave it at that. Thank you very much for joining in. By the way,